What is alternative minimum tax, AMT, for investments? Imagine you're planning your taxes and thinking about your investment income. You might wonder if there's a hidden layer that could change what you owe. That's where the alternative minimum tax comes into play. It is a second way the government checks your taxes to make sure everyone pays their fair share, especially those with higher incomes or lots of investment gains. The AMT is a separate calculation from your regular income tax. It was created to prevent wealthy taxpayers from using too many deductions or credits to lower their tax bills too much. When you file your taxes, you do two calculations, one under the normal rules and one under the AMT rules. You end up paying whichever amount is higher. For investors, the AMT can be tricky because it affects how certain income and deductions are treated. For example, if you exercise incentive stock options, the difference between the price you paid and the stock's current value is added to your AMT income if you don't sell the stock right away. This can cause a big spike in your AMT taxable income, even if you don't owe regular income tax on those shares this year. Interest from municipal bonds is usually tax-free for regular taxes, but some private activity bonds are taxable under the AMT. This means if you hold bonds from certain private projects, you might owe more tax under the AMT calculation. Deductions for state and local taxes, including property taxes, are not allowed when calculating the AMT. So if you itemize and pay high state taxes, this can increase your AMT liability. Also, some miscellaneous deductions and investment interest expenses are limited or disallowed under the AMT rules. Understanding how the AMT works is important for planning ahead. If you exercise incentive stock options, it's often better to do so in a year when your overall income is lower or to sell the shares quickly to avoid a large AMT hit. Monitoring your investment income, especially tax-exempt interest from private activity bonds, can help you stay on top of potential AMT issues. If you live in a state with high taxes, the disallowed deductions can push you into paying more under the AMT. Spreading out income and deductions over multiple years can sometimes reduce your exposure. Consulting with a tax professional can help you develop strategies to minimize the impact of the AMT. In summary, the alternative minimum tax for investments is a way the government ensures that taxpayers with significant investment income or certain tax benefits pay a minimum level of tax. It mainly affects those with incentive stock options, private activity bonds, and high state and local taxes. Knowing how it works can help you plan smarter and avoid surprises when tax season arrives.